Prepare cash, the markets are going on sale. Recessions strike fear in the hearts of most people, but for those who are prepared, they're a time of massive opportunity. Wealth isn't made when times are easy. It's created when others panic, and the brave take action. In this video, I'm not only going to give you the tools to prepare for the next economic downturn, but I'm also going to show you how it can be the beginning of your journey to building significant, lasting wealth. If you're ready to think like Warren Buffett and make the most of a recession, keep watching. When the economy tumbles, the stock market follows. Fear spreads like wildfire, forcing prices to plummet. Businesses that are worth millions suddenly sell for cents on the dollar. At this moment, you have two choices: follow the masses into panic or look at the chaos with purpose and confidence. But here's the catch. Only those who are prepared can take action. Just ask Warren Buffett. He isn't the slightest bit afraid of market downturns. In fact, he loves them. Why? Because they offer the rare chance to buy great businesses at a huge discount. For Buffett and other smart investors, recessions are like the ultimate sale. The question is, will you be ready to shop when the market is on sale? Let me walk you through what Buffett does that most people don't, and how you can follow his strategy step by step. The first rule of thriving in a recession is having cash on hand. Think of it like this. When the best deals hit the market, you need to act fast. If your money is tied up in other investments or unnecessary expenses, you'll miss the boat. Buffett always keeps a portion of his portfolio in liquid assets, things like cash or short-term securities. This enables him to move quickly when he sees a great opportunity. During times of crisis, the stock market becomes a playground for the prepared. So, how can you start preparing cash today? Begin by cutting unnecessary expenses. Take a hard look at your monthly spending, subscriptions you're not using, luxury items you don't need, or services you could live without. Redirect that money into a recession fund. Even small amounts, saved consistently, build up over time. Next, park this money somewhere accessible but safe. Consider high-yield savings accounts or short-term government bonds, where your cash can grow modestly but remains easy to access. Remember, during a recession, your cash isn't just sitting around, it's waiting to work for you. Once you've built your cash reserve, it's time to use it wisely. This step is where most people fail. In a recession, cheap stocks flood the market. But not every discounted stock is worth buying. In fact, many companies won't survive the downturn. This is where Buffett's wisdom becomes invaluable. He doesn't buy just anything because it's cheap. He looks for businesses with strong fundamentals. Let's break this down. First, focus on quality companies, those with dominant positions in their markets. These are businesses and industries that are essential regardless of economic conditions, such as consumer staples, healthcare, and utilities. Second, check their price-to-earnings (PE) ratio. A low PE ratio often means the company is undervalued. This could signal a good buying opportunity, but you need to confirm that the company is financially healthy. Lastly, avoid companies with burdensome debt. Businesses with high debt-to-equity ratios are vulnerable during recessions. Money dries up and debt payments can crush them. Instead, look for companies with manageable debt levels and strong cash flow. The goal here is simple. Find businesses that are built to last, even in tough times. You're not gambling on risky, leveraged companies. You're investing in resilience and strength. This step is critical because the companies you buy during a recession will carry you through market turbulence. Don't invest in something just because someone else says it's a good deal. Invest where you have confidence and understanding. Warren Buffett famously avoids investing in businesses he doesn't understand. He focuses on industries and companies he believes in. You should do the same. Here's an actionable tip. When picking a stock, ask yourself, will this company still exist and thrive in 10 years? If the answer isn't a clear yes, move on. Recession investing is about creating a sustainable financial foundation, not chasing get-rich-quick schemes. Let's use examples to clarify. During past recessions, companies like Johnson & Johnson, Coca-Cola, or Procter & Gamble proved resilient because they sell everyday products people can't live without. These companies may see their stock prices dip temporarily, but their businesses remain stable. These are examples of the kind of investments you want to target. The beauty of a recession is that it forces panic selling. Investors who can't endure market drops sell their stocks, often at significant losses. This drives prices to irrational lows, creating incredible bargains for those who keep their cool. Here's why this works in your favor. When markets recover, and history shows us they always do, the value of your investments skyrockets. Those who bought quality businesses during the downturn reap the benefits. Think of the 2008 financial crisis. Stocks nosedived, but within a few years, markets not only recovered but surged to historic highs. Investors who had prepared during the crash walked away with massive gains. If you're still hesitant, consider this. Recessions don't last forever. They're temporary. But the wealth you build by investing during tough times can last a lifetime. The key to succeeding in recession investing isn't just having cash or picking the right stocks. It's adopting a contrarian mindset. This means doing the opposite of what most people are doing. When panic sets in and everyone is selling, you need the courage to buy. This mindset aligns perfectly with Buffett's famous advice: be fearful when others are greedy and greedy when others are fearful. The average investor lets emotions drive decisions. They see market drops and assume their money is disappearing. But the smart investor sees those drops as opportunities, not threats. By thinking contrarian, you set yourself apart from the crowd and position yourself to capitalize on their mistakes. It's not easy. It requires discipline, resilience, and preparation. But the results speak for themselves. Let's take a look at history to see how this strategy has worked before. During the 2008 recession, Warren Buffett remained calm while others panicked. He invested in companies like Goldman Sachs and Bank of America when their stock prices were at rock bottom. Over the years, those investments generated billions of dollars in returns. Go further back to the dot-com bubble of the early 2000s. While tech stocks collapsed, Buffett continued to focus on value stocks, companies with strong cash flow and solid fundamentals. Once again, his patience and discipline paid off as the market recovered. These examples prove an essential point. The chaotic, uncertain environment of a recession consistently creates opportunities for those prepared to seize them. If you take the time to prepare yourself, you can become one of those success stories. At this point, let me lay out a clear, actionable plan to follow today. Save and cut non-essential expenses. Start building your cash reserves by identifying and eliminating unnecessary costs. Research market-leading companies. Create a watch list of businesses with sound fundamentals and low P/E ratios. Monitor debt levels. Focus on companies with manageable debt and strong cash flow. Invest strategically during the downturn. Begin small, making confident investments in businesses you believe in, and scale up as opportunities grow. Stay disciplined. Avoid emotional decisions. Stick to your plan and focus on long-term growth rather than short-term moves. Reinvest dividends. If your investments pay dividends, reinvest them to maximize your returns when the market recovers. Each of these steps builds on the philosophy and strategy that Buffett has mastered. The sooner you start, the better prepared you'll be when the next recession hits. Recessions don't have to be a time of panic. For wealth seekers like yourself, they can be the ultimate wealth-building opportunity, but only if you're prepared. By following Warren Buffett's proven approach, preparing cash, identifying quality companies, and investing without fear, you can turn market chaos into a stepping stone toward financial freedom. The key is preparation, discipline, and the courage to act when others hesitate. The clock is ticking. Markets will dip again. Ask yourself, will you be ready? Take the first step today. Build your cash reserve, start your research, and position yourself to win during the next recession. Remember, generational wealth is built during times of uncertainty. The time to act is now. Bitcoin will soon enter a bear market as well, and according to the halving cycle, it should reach a bottom around the end of 2026. My estimate for the bottom is between $30,000 and $50,000 United States dollars per Bitcoin. This will also be a great opportunity to buy. Of course, if you don't like taking risks, I recommend keeping your Bitcoin position to just a few % of your total portfolio.